I think what Joe said in the interview with Emily, one of the things he said was that investors are expecting more, and he's right. I think investors do expect more. We clearly don't have the crystal ball to say, what the companies should do or should not do. I do have a couple of ideas. I think one idea is easier to do, the other is very, very difficult. Let's talk about the easier ones first. The easier one is increase the pace of the buyback. Yes, the company increased the size of the buyback, but the pace of the buyback remains about $1 billion US dollar a month. And some of the investors are looking for more. And given Alibaba generated $25 billion free cash flow just over the last 12 months, they do seem to have the capacity to do more. Now, even if they cannot move all the cash they have onshore to offshore, there are other ways, such as debt offshore. There are other options they can leverage to increase the pace of the buyback. But the more important thing is harder to do. The harder to do is back to what Emily highlighted, the restructuring part. I think, yes, they have sort of walked back on some of the things they said a year ago. But more importantly, I think investors are hoping for the Baba senior management to sort of sit down, really, really think through what they want to do and what they don't want to do, right? Steve Jobs famously said, to decide what not to do is as important as to decide what to do. You cannot do,
Yeah.
all the things they're doing now, still expect some amazing results.
All right. So, Jiong Shao, what Joe Tsai did do, what Jack Ma did do, is spend about $200 million buying Baba, which is incidentally right now, it's at about, what, 74, 75 bucks a share. That's trading at about 10 times earnings. And by that metric, it's looking pretty cheap. How important do you think that was as a signal of confidence, what both of them did?
Oh, it's incredibly important. I think we have always said Baba shares are probably the cheapest major tech stock in the world. Depending on how you do the math, it's trading anywhere from 2 times free cash flow to 5 times free cash flow. When their US peers are trading at 30 times free cash flow, right? So we're not talking about a little bit different. We're talking about multiples of difference. But there's a view on the street, there's a concern by investors. Is this a value trap? I mean, that's another big topic. We can spend hours on it. But I think the fact both Joe and Jack bought shares recently and are stepping up their ownership in the company at this critical juncture, I think that is a very, very strong signal to the investors. But investors sometimes can be a pretty difficult beast to please, and they are looking for more, as Joe mentioned.